All right, here's what we got. Wolfspeed has been grappling with sluggish demand in industrial and automotive markets and tariff-induced uncertainty. The company is looking to file Chapter 11 bankruptcy that would have the support of a majority of its creditors after rejecting several out-of-court debt restructuring proposals from the creditors. And from what I have been reading over the past few months, Apollo Global Management is their largest creditor. The company, which manufactures chips using silicon carbide, raised going concern doubts. You guys, if you've been around on the channel for a while, you know that I always make people upset as I talk about going concern warnings in 10Ks, but I talk about that stuff because as investors, you need to pay attention when a company is disclosing a going concern warning in their filings. They're telling you we're in some serious doo-doo here. And that's kind of your heads up. If you want to speculate in it to manage the risk exposure that you have, either by managing your position size to a position that you're comfortable seeing all of it, or setting up some hedge with, for example, puts, long-dated puts. If you're intending to hold the stock, have some puts and as downside protection if you see those going warnings. And let's see, it also says the company forecasted weaker than expected annual revenue earlier this month. They also had the CFO leave the company. There's a lot of things. I kind of am seeing parallels between Wolfspeed and Bed Bath & Beyond. They lost their CEO, CFO. They had going concern warning. Bed Bath & Beyond doing a bunch of dilution as they were trying to bail themselves out. I haven't checked yet if Wolf has any ability to raise cash selling stock. But the problem really more about their debt, and people are asking good questions. How could they have liquidity problems when they've got $1.3 billion of cash on the balance sheet? And I think that's a good question. Ethan says we have a chart that looks worse than AMC last night. Even worse, Ethan, I saw people in the Wolfspeed Reddit group last night and on comments here in Webull, and I didn't check stock to it, but I'm sure it's the same, with the same old tropes you see in every retail community. I'm buying more here. You know, they're just trying to scare us. Thanks for the tasty dip. Shorts are scared. We know what we hold. Those kind of upset me every time I see anybody say them in any ticker. What I feel bad for is the people that have good questions, like how could they possibly be going bankrupt if they truly have $1.3 billion? Those are kind of the real questions that I want to get into maybe on this live stream. 0 shares available on Wolfspeed. Let's pull up, I was looking at their short interest last night, mediocre, and you know what is amazing to me? Nobody's talking about this as a short squeeze. You know, all the pumpers, the promoters that like to talk about short squeezes, mediocre. No one's talking about this. Do you know what the short interest on Wolfspeed? It is 43% as of April 30th. Now, I'm hopeful that the majority of people weren't talking about it because there's a high bankruptcy rate. Right? The company has disclosed they had a going concern risk. So maybe the bulk of people just didn't want anything to do with this. That was probably looking at today's price act, right decision. But there were still thousands of people, tens of thousands, that were investing in this stock at fell. Let's look at their belt. Huh? Hey, hang on, mediocre. Let me. I think they couldn't hear you. Let me bring the audio. Go ahead. Can y'all hear mediocre, by the way? Because I don't see my desktop. And can you hear him? Well, you can. I'm curious if the YouTube audience can hear mediocre. I don't see my, the little audio thing. It's not lighting up on my desktop audio mediocre. Yeah. He is saying that he's looking to see if Wolf is shortable. He's saying that there is no shares available. What'd you say the cost to borrow was that you're seeing? They say something mediocre.
Can you hear me now? Just like
yeah, I think that worked.
So I think that worked. Tell everybody. Oh, perfect. So I was trying to tell everybody is I was just looking just to see on my Thinkorswim platform. So right now there's a borrow rate of 45% on Wolf, and there's 0 shares available to borrow. So if you wanted to short Wolf, not encouraging anybody to do that, there's 0 shares for you to borrow, so you're not going to be able to, and there's a 45%. And if you to compare it with other stocks I'm looking at to see what their rate is, which we do all the time, Finger has a 285% short sale borrow rate, and there's 374,000 shares available to borrow. Where you have Mullen has 192%, and they have 145,000 shares available to borrow.
And you're getting that data from Thinkorswim, right? Your actual platform.
Correct.
I'm showing on IBKR 0 shares of.
The reason that we bring this up is if you look at Finger, for example, and you wanted to short Finger, it's going to cost you a hefty amount to borrow it. So if you're going to hold a short position on one of these tickers with high short sale borrow rate, you're going to pay through the nose. It's not worth holding it short. The reason I bring this up is because Tony and I had a conversation probably the other day where we're talking, people aren't holding short positions, guys.
But the whole narrative from the Finger promoters is that this thing is being shorted to death. But I mean, when you see a borrow fee of 300% plus a negative 300% rebate, that's almost 700% annualized cost.
Right. So if you're holding it and the stock's not moving down,
you're losing your ass.
Money. Exactly. That's.
I don't get this whole narrative. Finger is being massively shorted, other than if you're day trading it.
And the reason why you're not allowed to borrow shares on Wolf right now is because it's traded so many shares in the market because of the downward move.
So one thing we do, I don't short stocks. Mediocre does. One thing that I try and do, compare data sets like this. You guys see this all the time. People post it. This is only Interactive Brokers. See at the top, highlighting here. People act like this screen is the entire set of borrowable shares out there. This is one broker. We utilize our team in the Discord to check multiple brokers and see what the real shares available and the real cost of. Don't ever, people post this screen up and say, oh, there's 0 shares available. Mediocre, have you ever seen a YouTuber say that? I don't understand how they could be stock when there's 0 shares available.
They say stuff like that all the time. I
don't broker you're looking at here, guys. Wake up. Wake up to who is giving you accurate info, I guess. You don't want to invest on bad deals. Although, mediocre, what you've been confirming with me lately is, largely what you're seeing on other platforms is the cost to borrow fees are very similar, although other platforms have shares available sometimes when IBKR might.
Yeah, like, okay, so for example, wasn't going to bring this up, but if you wanted to, say, short AMC, for example, on Thinkorswim, right now there's a 0% short sale borrowing rate. So they have 5 million shares available to borrow. So if you wanted to short AMC right now, it wouldn't cost you anything to short it. So the reason I bring this up is because I'm not shorting it, but if they wanted to short it, there's not a lot of shorting going on. That's what I want people to understand. If there was a lot of shorting going on and it was over shorted, you wouldn't have shares to borrow. Do you understand what I'm trying to say? Does that make sense?
Yep.
I'm just using these as examples, people. Like, I'm not telling people to do any of this. I don't do this, and shorting a stock to me is very risky. I only do it when I have a good chance I'm going to win my trade, because I'm not going to put up money I'm going to lose. It's just not what I do. So, but I'm not shorting anything right now, for the record. I'm just talking about things that are on there, and the reason we're talking about it is because Wolf is down. What's the percentage it's down now?
70%.
70% overnight, right? That's a big move down. So if somebody was short yesterday, they made a boatload of money today.
The other thing that I saw that was kind of, what's the word? I'll let you guys fill in the word. Mediocre. There were millions of dollars of puts that were bought right before the market closed yesterday, just before this article came out. Out of the blue, all of a sudden the put volume spiked, almost as if somebody knew something.
Yeah.
Someone always knows something. Motherfuckers.
We don't always get the information first, people. That's the other thing, right? There was a video I posted in the Discord a while back. I don't remember the video, but it had to do with AMC and GameStop and about the disbursement of information, and I forget what it was about. But the guy that was talking was like, we're behind the 8 ball on information. That is 100% true. So we, as retail, have to be super cautious in where we get our information from if we want to win. And that's what I've learned over time.
I want to pull up a couple things here, Mediocre, from the balance sheet on Wolf, because, as I've been looking at it over the past couple months, my very first casual glance is, wow, they have a ton of cash. Look at this, $730 million in cash, $669 million in short-term investments. Total current assets, including inventory, receivables, total current assets, $2.8 billion. Total current liabilities, only $618 million. If you just looked at that, you might think, they appear to be not in horrible shape, if that's where you stopped your due diligence. Because that means they have working capital of $2.2 billion. Doesn't sound horrible, right? But if we dig a little bit deeper, long-term debt, $6.5 billion, and it's been growing every year since 2021. Ballooning, in fact. And they have a variety of different debt maturities. And if we go into one of the 10 Qs, what I saw last night as I was digging through again, looking at the debt, is they have about $700 or $800 million of maturities and interest coming due very soon. Very soon in terms of corporate life cycle, like within the next 12 months, which is going to wipe out all of their cash. They'll still have short-term investments. However, if you read in the 10Q down in the section where they talk about the going concern, what they also talk about is the 2030 debt requires that they have a minimum liquidity that debt holder has a lien on of around $650 million. So here's the problem, Mediocre. If they spend all their money paying off the 2026 debt and the interest payments, they're down to their minimum required liquidity, which the bondholders have a lien on. They're basically almost out of cash. You see what I'm saying?
Absolutely.
And that's how just casually looking at something like this could lead you into making some bad decisions, and why I recommend that you guys go read all of the risk factors in the 10Qs, because what I just shared with you, those extra details, are in their 10Q. And one thing on troubled companies that I'll search for is I'll go look for going concern warnings. And that takes you right here to their liquidity section, where they talk about everything that I just mentioned. And they do say in here, they're talking about the debt. They're talking about the fact that they're likely going to have to do a restructuring, a potential out of court or in court capital restructuring. Remember, I tell you, these companies always will disclose to you in the filings what the truth is. They'll go on social media and say the complete opposite. Have you ever seen that happen, Mediocre? Remember when Sue Gove did an interview about Bed Bath & Beyond, saying how they were working through things, and then the next day they filed bankruptcy? It's amazing how these CEOs and companies can go say things on social media while totally different chessboard is in play outside of our view. But they know how to stay out of legal trouble because they fully disclose all of the risks in the 10Q. They say the company is actively engaged in discussions and negotiations with certain holders of its indebtedness regarding the terms of a potential restructuring, with the goal of not impacting its customers, vendors, and employees. These discussions and negotiations are ongoing, and terms have not been agreed upon by the parties. Notwithstanding the company's efforts, there can be no assurance that the company will reach an agreement on acceptable terms. And yada, yada, yada. There's more down here. While the company considers these strategic alternatives, they retain sufficient liquidity in the near term, with approximately $1.3 billion of unrestricted cash and cash equivalents, compared to its debt repayments and debt service cost of $575 million and $322 million over the next 12 months. That is what, almost $900 million they have that they're going to have to pay out of pocket in the next 12 months. And further in here, maybe it's in the debt section, they talk about the 2030 debt having a minimum liquidity requirement. And once they pay this $900 million, they're going to be on the brink of their minimum liquidity. They are working on some cash tax refunds. I don't know the status of that. And they were working with the federal government for some incentives also under the CHIP plan, which has been, because after Trump came in office, some of that, whether or not they get those incentives is debatable or not. That's part of the problem the company's struggling with. And then you add tariffs on top of it. It's just been a dog pile, unfortunately, for Wolfspeed. Here is the meat, though, in this middle paragraph. The company, it says, due to the company's, right here, due to the company's ongoing consideration of an in-court restructuring that would result in an event of default, management has concluded that there is substantial doubt about the company's ability to continue as a going concern. When you guys see that statement in any ticker, you should take it very seriously and start thinking about risk mitigation. Doesn't mean that the company is going to go bankrupt. It means that there is a very high risk of it, depending on how things play out. Six Son, how you doing, amigo? Anya says, how did you know even to look into Wolf? Anya, I keep up on social media with just about every retail play that is being talked about. I don't make videos on all of them because, you know, what could I say about Wolf? All I could do is show you this same information that's been out there for months. And then what? I get a bunch of hate because people say I'm talking bad about the play. I'm not going to change the Wolf investor's mind, but I do think it's worth covering at some point to teach people how to avoid getting wrecked, because we saw people jump over the cliff with all the lemmings on BBBY, lose all of their investment. They're still buying bonds on a defunct company that are going to eventually be zeroed out. They think that somehow it's going to be resurrected, even though it's been clearly said that shareholders of common stock will get no distribution in the bankruptcy of BBBY. All the same things I saw that group of investors doing is happening right now within the Wolf community. And I just marvel at the psychology of people who, first of all, hey, props to you for being a risk taker. But the ones that get hurt by not mitigating that risk is it's disturbing how much money people lose by not reading financial statements and not taking any risk mitigation, and then putting hundreds of thousands of dollars in these tickers because they're so emotionally invested in the play that they discard all evidence and disclosures from the company as not meaningful. I don't get it, mediocre.
I don't either. Let me step away for a moment. I'll be back.
Chris says, so Tony, are people buying up Wolf right now? Yes, the investors in Wolf that were in at 30, 20, 10, 6, $3 are still buying it today. Absolutely. You can go on StockTwits, Webull comments, Reddit. They're absolutely buying it. They think they're buying the dip, that they're going to average down. What is fascinating about these plays is that from time to time, they have a resurgence. Be it news, be it the stock just hits a natural low based on the news that's out. I've seen these bankruptcy plays jump from 80 cents, like here, up to $1.20, $1.50, even back up to $2 for a brief moment based on any bit of news. Good news. But, you know, and if you got in at 80 cents or you're averaging down at 80 cents and you were to have that blessing, man, I'd be taking some profits off the table if that happened. You might be stuck on the rest of your position, but there's no reason to be averaging down. You get a blessing on a run up and then just watch that get eviscerated a couple days later again. If you get a chance to bail yourself out a little bit as you're averaging down, if there is a green candle, a big one I'm talking about, I'd give it some serious consideration to using that to offset some of your other losses and then just let it ride. Because most people at this point are just stuck. They're going to have to let it ride. Some people will get out and say, well, 84 cents is better than zero. If it goes into a court restructuring or a prepackaged Chapter 11 where they've negotiated the Chapter 11 with the majority of the lenders, then the most likely outcome, in my best guess, I'm not a bankruptcy attorney, just speaking common sense here, is that the bulk of the debt, or a great portion of the debt, will be wiped out. And those lenders that agree to wipe out the debt will exchange it for equity. And if the company continues operating, that debt for equity swap would be massive dilution to existing common shareholders. So you say, well, it's at 84 cents. How much worse could it get? It could get billions of dollars of new equity worse. That's how bad it could get. You could be obliterated if they did some sort of debt for equity exchange with the big lenders. If it went into a court managed Chapter 11, they could just say, day one, Common's getting nothing. We're going to redistribute the equity to the lenders, and they can either keep it trading publicly or take it private. This is assuming, that this news article from Wall Street Journal is correct. I have no idea. We haven't heard from Wolfspeed, but we have seen, just as we were looking, we've seen their disclosure in the 10Q. So the community right now is saying this is a hit piece. It's not true. I don't know. I don't know what to tell you. That I'm reading the company's own words that this is a very high probability outcome, and why. That they might have to seek court, in court or out court restructuring. Scott with the humor. What is the most difficult thing to master if you want to become a nightclub bouncer? 7 hours of holding your gut in. Same thing, Scott. If you're old like me and married to a 38-year-old, a low 30s, and take her out to the nightclub, I got to hold my gut in for 4 solid hours. Psh. Guts for the long term says, got some Wolf June 20th $2 calls at 15 cents just in case. Thanks for covering it. Good luck to you, Guts. I wanted to say Gus. Yeah, I wish all of you guys luck. There will be, I won't say there will be. There is often bounces in these bankruptcy plays, which is what draws people to them, like a bug to your light on your back porch. That allure of what if there is a big bounce once it kind of bottoms out here. That could definitely happen. I don't know if it goes to $2, Guts, but if you get a bounce and you get in the green on those call options, if I was doing that, I'd try and buy multiples of them and sell them in brackets, with my immediate first goal always to be to cover my initial investment. And then if I feel like the chart is going to keep going up, let some of those calls keep riding. And maybe make a nice little payday. All it would take is some news from Wolf that, hey, no, we're not doing a prepackaged Chapter 11. But more than likely, the company, look, they've already done the disclosure that it's a risk. I don't know that they're going to say any more. And I've seen this many times where people poo-poo the news, and then after a matter of days or weeks, the company drops the hammer, the bad final news, like, yeah, we're entering chapter 11. Online Czar says, how can a semiconductor company go bankrupt? I have not dug through all of their 10Qs and all of the news. I've only been paying attention to this company since March. However, when we look at the financials, revenue's been flat, operating income cratering. So the first answer to your question, they're not making money. I mean, look back 5 years, they've never made operating profit, first of all. We look at profit margins down here at the bottom. Look at these profit margins. Gross margin, negative 12%. Operating margin, negative 67%. Profit margin, negative 146%. Free cash flow, negative 316%. You must look at these things. And when you see all negatives here, these are major red flags that you're playing with fire. I'm not saying don't speculate. Hey, speculate on whatever stocks you want, but manage the size of your risk because there's all sorts of red flags here. Let's look at some ratios. All people are looking at is, oh, they got 1.3 billion on the balance sheet and the short interest is 45%. Therefore, I'm going to be fine. But they ignore everything else on here. Debt to equity ratio, 31. That is ridiculously high. Very bad. Return on equity, negative 180%. Return on assets. These are other ratios that if you've ever seen my green, yellow, red dashboard, these are things that I look at just for a quick, how safe is this play? Look, when your ROE and ROA and even the return on capital are all negative, you got big problems. This is a high risk play. It will be shorted. I'm not saying there's not shorts in this stock. I'm showing you why they're in it. There's not much good news here. Couple that with the fact that the company has only been ballooning its debt over the last 4 years. They've been digging their own grave. They need a turnaround on both revenue and operating income. And I think management's basically, and the bondholders are reading the writing on the wall here saying there's no easy fix for this other than the easiest thing would be restructure. Get the debt payments and the interest wiped out. Give the company to the debt holders in exchange for new equity. And if they think that the company can be salvaged, once the debt is cleared up, then the company would keep operating. I see people posting, but they can't be filing bankruptcy. They have job postings on Indeed. I'm not saying the company is going to close down. They could restructure. They could do a prepackaged Chapter 11 and absolutely keep operating. But for common shareholders, those type of scenarios are not going to work out so well. Chris says, Bitcoin approaching 110. Beautiful. Let's take a quick peep over here. 109,262. Beautiful. If you don't mind, I want to check on GameStop also. I'm trying to see if GameStop is mirroring Bitcoin's move up. And yeah, we do have only 1% move up on GameStop. But over the past couple days, as Bitcoin has been going up, GameStop is trying to move up. I'm seeing a little bit of GameStop to Bitcoin unhooking because I think my thesis since the beginning of April is GameStop is going to follow Bitcoin, but the higher Bitcoin goes and the longer GameStop says nothing about if they own it, the more iffy investors get. I'm talking the big guys trading this one. The more iffy they get about whether GameStop is going to enjoy unrealized gains from Bitcoin, because we don't know if they own any. So it would not surprise me if GameStop to Bitcoin decouples a little bit, although I hope it doesn't. I do own some GameStop around $21, so I'd love to see it keep running. And go Bitcoin, go. Chris says, what was the deal with the volume spikes for AMC the other day? For the past 6 months, volume has been around 7 to 8 million. It spiked to 20 million plus. That was odd. We had on Friday, looking at AMC, that was Friday, right? 16th. Yeah. Massive volume and massive price spike. Now, well, I told my Discord in the morning when this happened, as you might imagine, I said, calm your tits. It's going to retrace by the end of the day, probably close to $3, and it might retrace all the way. It retraced down to 294. So my gut feeling as this was happening, I saw everybody, oh, here we go. Moonshot engaged. I'm in my Discords telling people, calm your tits. Think of the intelligent play. And they went off on their own without any instruction from me. I saw people posting later, I just made a killing selling covered calls. Boom. That is how you do it. The IV was spiking. What a great opportunity to sell covered calls and lock in some massive profits on a push up like that. When you don't get tricked by the emotional pumpers telling you that the moonshot is getting engaged. And congrats to anybody who sold those covered calls on Friday. You made bank. Why did the volume spike? That, Chris, I don't know. Repositioning around options expiration was a leading theory that I had. And a lot of that happens around 10:30 in the morning. So nice to see. I don't read much more into it other than it was an options expiration Friday. I think that for AMC, the market is still waiting to see what's going to be on a proxy statement, what's the outcome of a June bondholder lawsuit, and that there will be generally upward momentum to some degree because of people being excited about the box office. And we think that Goldman Sachs is done with all their forward contracts, so a lot of the selling and shorting pressure is out of the stock now. I think you could see a gentle move up as we wrap up Q2. And hey, if something more exciting kicks off, even better. But I'm not expecting that. Yeah, Chris, my thoughts that I said in Discord that morning is what I just told you, that my best guess at that time, without any other information, is that it was related to options expiration Friday. All right, we had Wolfspeed hit a low of 82 cents, now bouncing up 92 cents. Where will it end the day? I don't know. Anybody, invested in Wolfspeed have questions? I kind of want to see what the Reddit group has to say. Maybe we'll do that if y'all don't have any questions. Richie Rich says, my way too early AMC prediction is still 2.92 billion. Richie, is that domestic box office? I'd love to see any box office close to 3 billion. I'm trying to someone asked me why in the comments, you know how I get the comments on every video, why are you still making AMC videos if you don't own it? There's a lot to talk about. I think I'm being very quiet on AMC, and if you have watched any of my videos, you know why. I don't want to say something too bullish ahead of the company putting out some bad news, because then I would feel bad. Now, I hope that they don't put out bad news. I'm talking the proxy statement or the bondholder lawsuit. But I'm just trying to be very judicious about when I talk about AMC, because I need to get these two risk factors off my list before I feel like I can safely talk about the trade. I'll talk about movies, I'll talk about box office, I'll talk about estimated net income if you want. The company said that they're probably going to be cash flow positive the rest of the year. Those are all probably factual things, but what's going to be on that proxy? How are they going to address any liquidity concerns that they might have? Maybe they don't. Those are things that I want to get out of the way before I kind of feel like I can safely talk about the trade. I'm at about 2.8 billion domestic box office is my best guess, Richie. But if we see this weekend, for example, that Lilo and Stitch is beating expectations or Mission Impossible, then I can feel more comfortable about pushing up my estimate. I know there's people already calling for over 3 billion for to say that, but I'm trying to be as cautious as I can about not overhyping expectations until I really hear from the company what they're thinking. And my next best chance to see that is on the proxy. But I'm right there with you. I hope that it blows up box office. All right, let's see what the Reddit community has to say on Wolfspeed here. I tried answering a question last night in this group and they immediately blocked me. I don't know why. Kind of odd. Here we go. We got folks buying lotto tickets. At least he's being smart here, buying January 2026, giving himself plenty of time, not having to worry about theta decay by buying short expiration options. These are good till January 2026. He is paying more for them for buying that time. It is a lotto ticket. It might work out if Wolf got some good news. But just know what you're doing. Don't do this lotto ticket play with money that you care about, because it could easily go to zero pretty quick. And if there's good news, you could make money. All right, here's the gentleman who says the company must refute or disclose by 4:55 Eastern Standard Time. I don't, I'm not going to read this rule, but in general, my thoughts on that is that the company already disclosed that they have a going concern risk and are considering restructuring. So I don't know what more they could add to the conversation. The Wall Street Journal basically reiterated what was already in the company documentation. What do you want them to restate? They've already said here that they're considering restructuring and they have a substantial doubt if they can continue as a going concern. So these are kind of like needle in a haystack type DD where people search for anything. I see a lot of comments in here, people saying, we must pound the company with requests for clarification. They've already clarified it for you in the 10Q. Go read the risk factors. It's fully disclosed. I don't know what else to say. How can the bad guys control the borrow fee? The lenders control the borrow fee. Brokers. That they're not bad guys. They're brokers. They have clients that have shares to lend out. They have clients that want to borrow shares. Depending on the demand for those shares, that determines the borrow fee. And it's across a broad spectrum of many lenders. It's a competitive market, just like mortgage rates. It's competitive. And different lenders, different brokers are going to have different borrow fees. So I don't know that that makes them the bad guys. If you want to say that there's a bad guy, you could say it's the shorts demanding the shares. They're the ones driving the demand, which influences what the borrow fee is. But the lenders, I don't view them as a bad guy. They're making money. They're making money hand over fist, lending out, keeping part of that borrow fee for themselves. If there is manipulation, the company can halt trading. The SEC can halt. I don't think the company can halt trading. This is a publicly traded stock. The company has no control over shares in the secondary market. The SEC could halt trading. That's a good question. Can the company halt trading? I don't think that they can. Something good, a good little bit of DD to go dig into. Can a company halt trading on its secondary market stock? I don't think so. The SEC or FINRA, absolutely, they could. Brokers also could halt trading. They could turn off the buy button, right? Let's see what else info we got here on the Wolfspeed Discord. Am I the only one planning on buying this juicy ass discount? Rectimus, the venerable Redditor Rectimus wants to know. No, you're not the only one buying. I see a lot of volume on the stock today. 138 million shares trading hands. There are a lot of people buying the stock. A lot of people selling too. Someone's asking, is a prepackaged Chapter 11 feasible? Could we have a corporate bankruptcy lawyer or specialist let us know? The funny thing is, when I see things like this, beautiful that this gentleman is asking that question. But when I compare it to like the Bed Bath & Beyond group, they refused to have a corporate bankruptcy lawyer give them any DD, because if anyone with any education or experience in the sector even got close to talking about it, they would say, oh, no, you're wrong. You're wrong. They're not going to file Chapter 11. It's impossible that we'll get wiped out. So you just don't see a lot of corporate bankruptcy lawyers getting involved in these discussions, because as soon as they do, they get attacked. But I commend the gentleman for asking, and that really is the best thing that you could do, is go talk to an expert, not a Reddit community. Go talk to an expert. A CPA would be another good person. It's good to have a CPA friends, guys. Go get you some and ask them to look at the latest 10Q or the financials, company disclosures, and give you an unbiased view of what is the likely outcome. That is doing your own DD. Spending your day reading regurgitated DD nonsense on Reddit, not a great DD plan. Anya says a company can request a halt. It's a temporary suspension. Rolf says a company can request a halt, can't initiate it. Thank you, Anya and Rolf. I'm assuming y'all grokked that or chat GPT. I'm going to check into that myself. I'd be curious. Ask Grok what are some recent tickers where a company requested and was granted a halt. It's always good for me to look at real life examples to kind of hammer it home in the memory cells for my deep recall next time that question comes up. Tuesday after hours was a coordinated and illegal attack. Maybe it was coordinated. Maybe someone planted or encouraged that Wall Street Journal article. That's certainly a possibility. Is it illegal? No. They're reporting on stuff that is already in the company filings. I don't know what's illegal about that. Everything that was in that little blurb was already disclosed by the company a few months ago. So we got to be careful about getting on our high horse talking about illegal activities. I don't see what was illegal about necessarily reporting on a 10Q. And more than likely, that reporter has a source in the lending community that is very, I don't know. Is it insider information? Are they privy to negotiations? I don't know. Sharing that type of information with the reporter, maybe that's illegal, but the Wall Street Journal reporting on it, I don't know. I don't know that that's illegal. Another question for Grok, you guys. Educate me. Let's look it up. All right, what else we got here? The mod restricted the community due to FUD. Yeah, they booted me last night because I answered one question. Not in a
Tony
funny,
got the boot.
not in a funny way. I just answered my normal, like, hey, the question I answered was someone was posting about, hey, they're still hiring on LinkedIn and Indeed, therefore they can't be going bankrupt. I just said, hey, they could still be hiring. Chapter 11 doesn't affect that. You can't read too much into something. Chapter 11 doesn't mean the company's going to shut down, doesn't mean that they don't need new employees. Be careful what you're reading into. This is what led the Bed Bath & Beyond people into some really bad investments, is seeing something and then creating a narrative that confirmed their own bias. Oh, they're still hiring, therefore they can't go bankrupt. No, they could still hire all the way through a Chapter 11, all the way through going private or renegotiating the debt. I'm not saying the company's going to shut down. Oh, here's a good one. The company could buy back all 155 million shares for just $200 million. What's the market cap mediocre of Wolf right now, do you think?
Hold on, I'll look.
Shares outstanding, 155 million. Price per share, 97 cents. Yeah, we broke $1. Nice little push up. $149 million market cap mediocre.
Yeah, my thinkorswim's messed up. I'm trying to fix it.
So could the company buy back all 155 million shares for $150 million? Well, on paper, if you look at the market cap and their cash on hand, yes, they could. However, there are things that I want you guys to become familiar with, like the safe harbor rule, which is a rule in place to prevent companies from doing this very sort of thing without proper disclosures in advance. Typically, share buybacks require the board to approve it. I don't know if they have a share buyback already approved by the board. And even if all of that happened, safe harbor rules prevent, to my understanding, prevent companies from going back and just buying back the entire float all one morning. They're limited to, what is it? Memory bank search, They're limited to some percentage of the volume traded over the last 4 weeks, if I'm not mistaken. So no, they cannot just go buy the entire float this morning. Secondly, if you go look at the 20, 30, debt covenants, section 8.06, if memory serves me correct. The 2030 debt covenants, they are precluded, prevented, denied the ability to go back and spend cash buying back equity, buying back shares, by the fact that they borrowed money. That's a debt covenant. The company can't pay dividends. They can't buy back shares. Go look up the 2030 debt. I think that came out in June of 2023. Bottom, look up the indenture and look up section 8.06. And they talk about dividends and other uses of cash. Look, the bondholders are not going to let the company blow cash, saving common. They're not going, the bondholders they're higher up in the hierarchy than we are. They're not going to let the company go blow its cash when the bondholders are saying, you need to fucking bankrupt this company so we can get our money back, at least some of it. They're not going to let them go blow that cash on common shareholders, saving you. That's just the tough shit facts of common being lower on the totem pole than lien holders, and lien holders having the power to put these covenants in place when they loan companies money. They get to call the shots. And that shot was called, and this is very standard boilerplate language that the bondholders put in place to protect themselves from this very sort of idea that the company would go blow cash on share buybacks. Now, the lien holders can allow exceptions to those rules, but at this point in the game, I would say that's very unlikely. All right, I'm seeing you guys saying that they suspended on a move up. It did push up over $1, and then it fell. That seems like a suspicious halt. This move down. That doesn't look like the move is big enough to have caused a suspension. Even the velocity of this move up does not seem to have been at a high enough velocity to trigger a halt. So I'm not sure what happened there.
I think it's based off of the price of stock, isn't it?
It is, but I mean, if I'm looking at the 5-minute ticker mediocre, it dropped from, well, let's see, it dropped from, in 10 minutes, it dropped from $1.04 to 96 cents. I mean, we're right on the cusp of a 10% drop.
More than 5 cents, so I think it's a 5-cent move at $1, isn't it?
I think there's different rules for tickers under $5. I don't have all those rules memorized.
That's what I'm saying. I think it's a different rule. We'll have to look it up, but I think this happened before.
In general, you know, my thoughts about halts is they're hard coded in to the exchange, so I don't get into a lot of the conspiracy theory stuff about. We see halts up and we see halts down. It's hard coded in, but it does depend on the ticker and the price, if it's under $5 or not. I think $5 is the.
So Tony, that candle, how big is that candle right there? It's moving again.
Yeah, it's moving again. We're trading again. Mickelson said, should anyone try and catch the knife while it's falling at the moment? That's up to you and your risk tolerance. We talked about early this morning. I have no position in Wolf. I don't like trading bankrupt stocks. Bankruptcy, sorry, it's not bankrupt. Let me rephrase that. I don't like trading stocks that have bankruptcy risk, but a lot of people do. I'm not here to tell you if that's good or bad. If you're a savvy trader that enjoys high-risk trades, this might be right up your alley. It's very news dependent at this point. And what we've seen on many bankruptcy plays is they reach a bottom at some point right after bad news like this comes out, and then they rally a little bit. And I've seen good money to be made if you're willing to trade that in the few minutes that it happens on the push up. But unless Wolfspeed comes out with some good news, those rallies tend to be short-lived. Let's wonder if we can go back and look at. No, we can't. Oh yeah, maybe we can. I was curious what some of the rallies.
I just want everybody to know, Tony, that I'm not doing anything with this stock. I'm just watching it. I'm observing.
No, I can't look up Bed Bath and Beyond anymore on here. Yeah, I watch plays like Wolf Mediocre just to get a, for one thing, they're educational for the audience. There's a lot of good things to talk about here, like in the financials, in the 10Qs, company disclosures, Reddit posts, social media posts, sorting through all of that, searching for the truth and how to protect yourself if you're a genuine investor who is hoping for something good. If you're a speculator, you don't need any DD from me because the financials and filings don't matter. It's just it's a bet on news. Would you say that's a fair assessment, Mediocre? If we're speculating on a stock, we don't really care about the financials.
Yeah, I'm not going to speculate on Wolf. I'm all set. Other stocks I'm speculating on, Tony.
But if you were a long-term holder of Wolf, thinking that it was going to turn around and you're going to hold it for a year, you should. That's still speculative because of their financials, but you should be really, really intimately familiar with the 10Qs and the risk factors so that you can mitigate any risk of that speculation. What'd you say, Mediocre?
I said I don't disagree with you there, but I'm only talking about me. It's just I don't trade stuff like this.
For me, Mediocre, trading stuff like this is like flipping a coin. And I don't like those odds. We can find tickers where we have an edge. Right here, you're just completely dependent on news.
I looked at Archer the other day, and I was actually kind of shocked, and I don't know. I want to do some more research on Archer.
Archer or Aspen?
Archer.
Yeah. I've done a little bit of coverage on Archer. That's an interesting play. Archer Aviation, ACHR.
It came up on my scanner.
What was the criteria that made it come up? High short interest? High IV?
No. High IV.
High IV, okay.
Yeah. And then when I went and looked at it, I'm like,
holy
but it made me wonder, like, okay, that's in the EV industry, isn't it?
Yeah, they make planes.
Right. And I'm thinking to myself, well, what's up with Aspen? Because my feeling on Aspen. And that's all. So I looked at Archer. I don't have anything really bad to say about it yet. I need to do some more due diligence on it, but just something I was looking that came up on one of my scanners. The point I'm trying to make is I use scanners to find plays. I don't necessarily,
I don't know if you can see my screen here, Mediocre, but the big risk with Archer is there's still what we call pre-revenue. They have zero revenue.
Yeah.
So you're in a gamble for holding a stock versus the company needing to raise money. You know what I'm saying?
Yeah.
What's their cash position? What's their cash burn? They have $1 billion in cash.
That's what I see.
Operating cash burn
I think
is,
they have like 2 years worth of cash, something like that. 24 months or 20 months or
yeah, their
something.
operating cash burn's kind of low. So, I mean, it's not horrible. That I'd need to look on dilution tracker and see what the dilution risk is, but just a quick look at the balance sheet and the cash flow statement
I
say
wasn't trying to
that,
change the subject to this, honestly. I was just using
no,
it
it's
as an
good. I
example.
mean, it's good to bounce and compare different stuff. JP
came off
says,
of-
mediocre, we miss you. When are you going to do some live streams in the evening with us, mediocre?
Who said that?
JP.
I figured nobody cares about me no more, so I said, "Ah, hell with it, I'm done." I can't get people to follow me. I'm too honest, I guess. I don't know. I don't know, Tony. What do you say?
You make too much sense with your money making trades, mediocre. You're not talking about enough money losing companies. We need you to talk about G-Bucks and Finger and Nixie.
Yeah, I don't want to talk about trash. You know what I mean? I want to talk about good stuff.
Let's talk about some of these, the darlings of retail right now. Finger Motion, G-Bucks.
Oh,
I'm kidding. I'm kidding. G-Bucks was supposed to have a warrant issued today. I wonder if did anybody get their warrants? I can't tell.
I mean, I might start coming back. I was talking to Tony about it. I can't do anything this week.
He's a trust fund baby, Gus says. You're too busy for us. Mediocre, you and your trust fund baby.
Been out on my yacht in the middle of the ocean with no internet, guys. That's,
counting your millions.
Oh, man. Can't believe somebody called me that, Tony. That's the funniest shit I ever heard.
Anya says she got an Archer in July, out in December. Let's see how you did, Anya. 2024. Ooh, look at that. Anya made some money. It was trading between $3 and $5 and it ran up to $12. Good job, Anya. And what I like to see, Anya, is you locked in the gains as it pushed up.
Listen, I'm going to give you guys a secret, a little bit of advice. I'm going to give my buddy a kickstart, Tony's buddy too. All right. So go on TikTok and you guys got to follow Rolf. He's doing all the yield max dividend stocks. He's talking about those over there.
All right. What's his TikTok? How do we find him?
Let me pull it up. I'll
give him a proper shout out.
His TikTok is going to be let's see. It's just ROLF.
Rolf. ROLF. All right. Go give Rolf a follow on TikTok for some dividend plays.
Yep.
Rolf says
he
says at Rolf Crozier, ROLFCROZIER.
Oh, is he in the chat?
Yeah.
Oh, perfect, Rolf.
You're making him blush, he says, with your shout out. Rolf, we love you.
True.
We love you, Rolf.
I do love Rolf. That's my boy.
Not only does Rolf have a good head about dividend plays, he also is a good wheel trader. You guys know here on the channel, we love wheeling options on stocks. Find a ticker that you wouldn't mind owning. Sell cash secured puts on it. Maybe you get an entry, maybe you don't, but you make money. And eventually you'll probably become an owner of that stock if it drops below your put strike price. And then you take the shares and you start selling covered calls on them and just rinse and repeat. Make sure you're doing that on stocks you wouldn't mind owning in case it drops below your cash secured put strike price. And if you don't know what I'm talking about, the wheel is what we call our virtual ATM, how to make money with stocks. If you're holding a lot of shares of a company and you're not considering selling covered calls on it, especially when IV bumps up, you're just leaving money sitting on the table. This is
That's my game,
how the
baby. I
rich
love
get
it.
rich. What, mediocre?
I said, that's my game, baby. I love it.
It's how the rich get rich, mediocre. Sell cash secured puts and then sell covered calls.
I hate to be the bearer of bad news, but I really have to step out of here. I got some things I need to take care of. I got company coming in a few hours, so
appreciate you stopping in. Maybe Rolf can join us. Rolf, we're in the champagne room in Discord if you want to pop in. If not, no biggie. I know you might be out running errands and such. Gus says, this crew has a lot of strategies to make monies in stocks. True, true. Thank you, Gus. Anya says, good to hear from you, mediocre. He's still alive, Anya. I know I keep on telling you guys I talk to him every day. But I also know you guys haven't heard from him in a while. Happy Life, what's up? He says, I had 150 sold puts, strike at 250. Yesterday was still around $3. I thought my strike was safe. Sorry to hear about that, Happy Life. So what we'll hope for you is that by some miracle it gets back above 250 by Friday so that you don't get assigned at 97 cents. But if you do end up getting those shares, or did you dump the puts already? You could get out of the trade if you don't want to get assigned. That's your own risk decision to make. If you do get assigned, then you have more shares that you could sell covered calls on, but it's kind of like bailing out a rowboat with a hole in the bottom and all you got's a little cup. If the news remains bad, if the news is good and you've sold covered calls, then maybe you lose your shares to the upside. A lot of things to think about when you're trading options. And if you are not familiar with trading options, make sure you watch a bunch of videos on the wheel. I have a playlist on the wheel strategy. Read some books on options trading. Become an informed trader before you start jumping into options, because your risk is multiplied with options trading. Rolf says, I'm humbled, but in my car, if the live is still on when I get home, I'll join. Thank you, sir. Happy Life says he's still keeping the puts. Good luck to you, sir. I have no position in the play. I am just here as a observer of retail plays, observer of retail psychology. I love observing. I'm trying to learn on every bankruptcy play more and more. Bed Bath & Beyond was a great one to learn from. I was lucky on Bed Bath & Beyond. I sold about the same day Ryan Cohen did on that huge push up, and then I never got back into it. Because same reason, that I would look at something like Wolf, like they're disclosing a lot of troubling concerns. It's not something I want to long-term hold because the downside risk was too high. But as Bed Bath & Beyond was cranking up on the Ryan Cohen news, while he still owned it, that was a great, great trade. And that was just lucky timing on my part that I got out when he did. We were just watching the chart and it looked like it was topping out. And then like the next day, we got the notice that Cohen was selling his shares. And it was all over. After that, that play was done for anybody holding it. Chris says, I just checked on Fidelity. It won't let me buy 20 contracts in Wolf. Not planning on it, just seeing. I could only buy 15. Huh. Interesting. I have not ever run into a situation where I couldn't buy as many contracts as I wanted.
Did he do it all in one trade? Sometimes they limit it per trade. He might have to make more than one trade. You see what I'm saying?
Yeah, Chris, I don't know if you heard mediocre. He said try breaking it up maybe into like if you're wanting to buy contracts, break it up into batches.
It depends on your broker.
The calls are down pretty bad. Let's see how the puts are up. Holy fucking shit. Whoever bought puts yesterday, they're up like 3,000 to 5,000% mediocre.
Yeah.
Crazy.
Yeah. What's the IV on it?
800%.
Wow. I love that. That's a play, right? You know, you want to get in before the IV's up and let the IV work for you, baby.
I mean, just imagine if you were bullish on Wolf, but you were cognizant of the risk. You could have held your shares and bought some cheap puts when it was still around $3 as what we call hedging or insurance. And you probably, you know, if that put went up 3, 5, 6,000%, probably easily would have offset any losses you took. If you had a put,
but you have to crash out.
If you had a put for every 100 shares that you owned of Wolf, it's expensive, right? You got to buy the insurance. I've done that from time to time on different trades, and sometimes that insurance makes me no money, but it lets me sleep at night. Mediocre.
Yeah.
It cost me. I buy puts as a hedge, and I lay out some cash to do that, and then nothing bad happens. I was like, well, for the week that I owned those puts, I had the ability to sleep at night, knowing if I woke up to bad news, my position was going to be flat or maybe even make money.
Yeah, I mean, if you time your position right, you know, and you get a drop like what happened on Wolf, and you close out of your put position, you basically save your position, you know?
Right. And then you can, you can sell,
reset.
You can close out those puts, lock in the gains, and then you still got your shares, which are underwater, but you could still hold them, and if you chose, and now you're not in the red anymore.
Yep.
Until, if more bad news comes. If good news comes, then you're back in the race.
That's pretty much what the big dogs do, hedge funds, stuff like that.
That's why they call it hedging, mediocre. It's hedging risk. Yeah. And one thing retail is not very good about is recognizing risk and putting in a mitigation plan for that risk. We're really good at just letting it all hang out, flying by the seat of our pants and buying lotto tickets. But it just breaks my heart seeing people get wrecked in play after play when things don't work out. Every now and then, 1 out of 100 times, they work out. But those other 99, retail's just getting crushed.
It takes time. You got to have time in the market and do a lot of due diligence and research to kind of understand what you're doing. I think new traders buy into a lot of hype and stuff like that. And that's a problem. That's one thing I don't like, I
saw in the social media earlier this week, mediocre, a lot of people urging folks to sell puts at like $1.50, $2. There's no way it's going that low, they said.
On what?
On Wolf. When it was trading $3 to $4, they were urging people to sell puts down at $1.50, $2 to collect premium. But the problem is, if Wolf were to announce some bad news or an article like this comes out, all of a sudden you get stuck being an owner at 90 cents.
Yeah, they own these shares at 90 cents. Well, you're down, what, 50 cents a share?
No, they'd be down $1, $1.50 a share.
Yeah.
Depending on what strike they piss. Right.
All right. Say hello, Esteban. We're live. Hello.
What's up, Steven?
How are you, Tony?
I'm doing good. Hope you're doing well.
I am. Yeah.
Did you check out this chart on Wolf today?
Yeah.
I have not. I'm a little behind you though.
We're just doing a little bit of live stream, a little bit of DD, trying to grow the group knowledge on bankruptcy plays. I have no position in this stock. The last good bankruptcy play I followed was Bed Bath & Beyond.
Oh, all right.
And we learned a lot collectively. Some people didn't learn. They're still buying Bed Bath & Beyond bonds, thinking that they're going to make money. But a lot of people learned, and there's going to be a lot of good learning going on here with Wolf as well.
So this Wolf stock dropped 70% overnight. It's trading at $1 right now.
So when we were all sleeping?
It happened right after market close. A Wall Street Journal article came out.
Oh, wow.
It wasn't any news. I mean, the company had already...
They're going bankrupt.
The company had already disclosed months ago that they were in restructuring talks.
Well, I don't know if they're going bankrupt. I shouldn't say that. There's no definitive answer.
No, yeah, there's no answer on it. But like,
I'm just being funny to you, and I apologize to the community who's traded that.
You know what was amazing to me, Mediocre, when I look at the drop last night? It dropped, when that article came out, it dropped from 313 to $1.55, but the volume on that drop was minuscule. I guess just because there were no buyers in that 1 minute.
Yeah.
The volume was 397,000, and the price got dropped by 50% in 1 minute. Sorry, let me go to the 1 minute chart. The volume was...
My question, Tony, this is the part that always bothers me.
130,000 was the volume.
This is the part that always bothers me, Tony, right? Like, who the hell had a buy order in the after hours at that price that low?
On the puts?
No. When the stock price fell after hours on that low volume, right?
Yeah.
So for every sell, there's a buy.
Right.
So my question is who places a buy order that low?
Well, I'm going to guess, yes, in this first 2 minutes when it fell from 312 to $1.50. The first minute volume was 137,000. The second candle was 34,000. That's basically no buyers in 2 minutes, other than probably, okay, I'm guessing a market maker was forced to buy it. And then,
all right, well that's possible too. Yeah, I didn't think of that.
So then the market maker owns 150,000 shares at $1.50, and then it rallied up over the next 10 minutes, Mediocre, to $2. Guess what happened? The market maker unloaded those shares back onto retail, who was buying the dip.
Exactly, but here's my other problem.
And then guess what happened? Guess what happened once they got flat? The price tanked again. Wow. The price tanked from $2 down to $1.
Antonio, my question is this though: why, when I put a sell order, okay, it doesn't get filled? It could sit there, like no buyer ever wants to buy it in the after hours. I have to lower my price before they're willing to buy it. See what I'm saying?
Yeah, I don't know that I have the perfect answer for that.
So my question is how much were they willing to take a loss on their shares to move the price that much before the market maker came in to buy it? That's what I'm saying, you know? They must have been just taking hits all the way down. Losses, you know what I'm saying?
Yeah. At some point, once the first drop happened, then the, retail rallies together and say, all right, guys, here's a juicy dip. Let's buy it. And they start going in and buying the shares back from the market maker that had to absorb this loss. And then you run out of those buyers after 15 minutes. and the price just tanks again because someone else wants to sell. And retail is probably buying it all the way down. And they're still buying it.
Yeah.
But now we're...
That's the only thing, right? Like the seller had to take a loss selling it.
Yes.
That's what I'm saying.
Yep. But they could have been hedged also, mediocre. Whoever unloaded 150,000 shares in 2 minutes.
Yeah.
Anya says, could it have been a planned sale? You're breaking up
that's
there,
a
mediocre.
good strategy.
You're breaking up. Anya, it does sometimes seem like it's rigged. I mean, these big moves are algorithmic trading. Who it is, I don't know. Institution that owned it, a market maker shorting it. Could have been mediocre. That could have been just a market maker going short too. Wouldn't you think?
Yeah.
A market maker that knows they have a bunch of inventory in the shares. What are they going to do when news like that comes out? Go short immediately so they don't lose their ass. And then they could buy it back.
But Tony, think about it. That's a good strategy. Say you're sitting on information like that, you know that's going to happen.
Yeah.
Right? You could load up on cheap shares, let the price run up a little bit, right? And then just buy a ton of puts on the other side and sell your shares in the after hours to move the market because you know there's no volume.
Yeah. Yep.
Drop the article and boom. That's very possible.
The most suspicious thing to me was the timing of that article with the massive amount of puts bought before the market closed. That seems a little bit sus to me.
Yeah. But it happens all the time, Tony. It's not like
I know.
This is a once, you know. But that was the argument. If you want the information, you gotta pay for it, right? That's why you have these websites that all charge for information. You know?
Yep.
I posted a video, I talked about it earlier about that. There's a video that says the retail doesn't ever have the information and that's how they always lose. Which is true, right? Who had that article? When was the article released? It could have been released 3 hours, midday.
Ben says the main trading right now is institutional longs like funds or ETFs selling to institutional shorts. Well, the institutional shorts would also be sellers, right? Unless you're talking about shorts covering and needing to buy up shares, which could be. I'm not sure what you meant, Ben. I mean, if you were short prior to yesterday, you're sitting up 70%. I would expect some short covering to be going on, locking in that gain. Wouldn't you, mediocre?
That's probably what that pump up was.
Yeah.
That's what I would do.
Yeah.
Once it bottoms out, it won't go down no more, right? The buyers start stepping in. You got to get out.
Yeah, that could have also been what, after these two big drops in after hours, why it rallied back up. Because shorts start saying, all right, we're up 70, 90%. Start closing these trades out. And you get you get these little fake rallies.
That's the thing that I don't think that people understand too. When you have a high cost to borrow, the longer you hold that, if you borrow it for 10 minutes, just for the sake of argument, I want everybody to understand this. If you borrow shares for 10 minutes, you owe for the whole day. Period. So whatever that 300%, 45%, whatever that cost to borrow is, you owe it for that day, period. That's what I don't think people understand, right? So shorts are going to close their positions. They're not holding these things long term. That's what I don't think people understand, Tony.
Yep. Which is what makes the whole finger thing seem weird, that people are obsessed with the shorts. Like it's over 300% cost to borrow. Nobody's holding that thing short. And fingers not going bankrupt, mediocre.
Yeah. No, I know.
Wolf had a more reasonable cost to borrow and a much higher probability of some bankruptcy news. So it was maybe a smarter short. I don't see how finger is a smart short at all. Therefore, I don't think it's really being shorted other than quick in and out day trades.
Yeah, it's day traders for sure, but I think that it's getting shorted because it's overvalued, probably.
Ben
I don't know.
says yes, he meant short covering. Yeah, I agree with you, Ben. I agree with you.
Those are just my thoughts, right? But I think a lot of traders, newer traders, don't really. I'm not. This is the problem I think people have with me is because, not that I think that people are stupid. I don't think that at all. I think that a lot of new traders don't have the information and don't necessarily understand all the market mechanics, right? I think that's part of the issue, right? With when they get tied up in these plays that are being pumped on the internet.
I see a lot of comments here in the Reddit group, people saying don't do anything until the company makes an announcement. The company already made an announcement in the 10Q.
Oh, yeah.
I would not expect any further news from them in regards to this article. The news will be eventually we have agreed to a restructuring or we're filing Chapter 11 in the court.
I agree with you, Tony, because it's in the 10Q.
And just as we discussed about their debt, their obligations here, $900 million, and their minimum liquidity requirement under those 2030 bonds, the company is effectively out of cash. Even though they have 1.4 billion, they're effectively out of cash over the next 12 months with no turnaround I see here possible to save them in the short term. Operating income negative $500 million. What's the capex?
I'm going to mute for a few minutes, Tony. I'm listening.
All right. Capex. God damn, man. $1.7 billion in capex. There's more cash burn right there. The only way that they've been surviving is by, you see here, this line, net debt issued. They've been issuing billions of dollars of debt and to try and save themselves. But all that debt being issued, when you can't turn around income, eventually that piper comes home to get paid. And that's where we're at. Doesn't look good. And I that'd be cool with me if the company comes out with some announcement saying, don't worry, we're not going to go bankrupt. But why would they do that when they spent pages here telling you about the risk of a restructuring? They're not going to come out and go against a disclosure in the 10Q. All they could confirm is, yeah, we're in talks. We're trying to work it out. That's about all they could say, because that's the truth. They already painfully disclosed it. Here we have some rally cries. Who here is still holding? I doubled down and bought 100 more shares. You can call me all the names you want. I would never call you names, friend. I feel sorry for you. But and I wish you luck. He says, I would love to see an upvote from everyone here still holding it. Ignore the FUD. Talking about risk factors in a 10Q in a news article highlighting that risk is not FUD. This is where we have to grow up as retail traders and not ignore facts. A company filing, company disclosing things to you is not FUD. Talking about that is not FUD. It's helping share real DD. G Money says FU SEC. I don't know what the SEC has to do with this. I mean, the company is financially struggling. Are the shorts bad guys? Yeah. I mean, they're taking advantage of a company with some really bad financials to take the more obvious side of the trade. Does that make them a bad guy? To a lot of retail, yeah. I'm not a big fan of short sellers. But that's the market we're in. Short selling is legal. And I haven't seen any words from this administration that they plan to change that. In fact, I've seen the opposite communication from this administration, that they don't see any reason to stop short selling. Corey, what's up? He says, thank God I don't hold crap like this anymore. Tripled my money on HIMS. Good job. And Tesla. Have you locked any gains in, Corey? That's what we want to know. Are you being smart and shuffling a little bit back into your cash pile? Good job on those trades. Ben says the CapEx was an issue as Wolf was trying to increase production facilities. Yes, I briefly read about that. They were working on a new facility, and I don't know all the details about it, but it reminded me of a similar situation of another company we've been doing some due diligence on, which is ticker ASPN, Aspen Aerogels. Faced with a similar quandary, Aspen saw at the beginning of this year that due to the Trump administration, that they're in the tariffs and not really supporting the EV industry, that their revenue was going to take a hit this year. And they had another plant that they were building in Georgia. They've been building it for a couple of years. And Aspen took decisive action to scuttle that plant. We're done with it. We're going to take the loss. We're going to take the hit. We're going to try and sell some of the equipment and recoup some of our loss. But we don't think that, in the short term, that adding another plant is going to do anything except hurt us. And so Aspen got whacked for a lot of reasons, for lowering their guidance on revenue because of the tariffs, because of the EV industry slowing down, but also because of the massive write-off that they took on scuttling that plant. But now they're setting themselves up by the end of this year to not have operating losses. So it's an unfortunate situation for Aspen, but I can appreciate, as someone that looks at numbers, management being decisive and making the hard call to scuttle that plant. Because you don't want to be stuck in a situation where now you got two plants and no demand from your customers for parts. And now you've just sealed your doom in terms of cash burn. Yeah, Anya, they have contract facilities in Mexico and China, which I like, because you can shut down a contract facility relatively easy versus something that you own. I like that plan. Carl says, if you like Tesla, it has two ETFs, TSLL and TSLQ. Are those daily reset ETFs, Carl? Do you know? That is important to know. If you have a daily reset, I would guess based on the description here that they probably do. Some decent money to be made over the last month on those. TSLL on the long one. TSLQ. And as expected, if you were betting against Tesla, you've been getting wrecked at 2x speed. Yeah, go in. If you guys aren't familiar with what I'm talking about, go in on these 2 and 3x ETFs and research what is a daily reset and why does it matter. Go ask ChatGPT or Grok. Most of those ETFs are meant for day traders, not for holding long-term positions. The reason I say that is the daily reset can minimize your gains that you might otherwise be expecting. Yeah. All right. Ben gets it. Only for short trading. Yep. I've had people in my Discord or even on the YouTube lives over time say, I was wondering why the stock was going up and I wasn't making any money. Daily reset on the 2 and 3x leveraged ETFs. I have traded some from time to time on indexes, or I can't remember if I've traded the Tesla 2Xs or not. If I have, it's mainly only been one time, but we tend to do it more often if we have a very strong feeling about a direction of an index in the short term, and we're either fabulously correct or famously wrong. Not something I do often because it is a high risk bet, and you gotta really have a good premonition. It's always a gamble. All right, before we wrap up this live stream, I think we're running out of questions on Wolf. I think I've covered just about everything I wanted to. If you're just joining in, we talked early this morning about their financials, the income, operating income, horrible profit margins, pretty bad. Trying not to use horrible over and over. The balance sheet at first glance looks good because they have 1.4 billion in cash and short-term equivalents. They have 2.8 billion in current assets and almost no current liabilities. However, they've been stacking up long-term debt at an unprecedented pace. And as they disclosed in the 10Q, they have $900 million of debt payments and debt service costs coming due in the next 12 months. Plus, other footnotes in here let you know that they have about a $650 million minimum liquidity requirement. And if you add those up, 900 plus 650, that pretty much wipes out all of their cash. So first glance, if you don't go in and read 10Qs, you might think this is relatively safe, which is why I beg you guys to go read risk factors. Spend time. Not if you're day trading, not if you're swing trading, not if you don't care about risk, if you just want to buy a lotto ticket, this is not necessary. But if you're long-term holding, expecting a turnaround, these are critical things to know. And the only way that I would know them is I spent the time going in and reading. Why didn't I make videos about this? Because no one cares. If you were already in Wolf, you knew it was a risky play. Maybe a couple people out of 100 might have changed their mind. I'm not here to change people's minds on plays. I'm here to help educate you what to look for in the next one so that something like this doesn't happen to you. And look, if a company discloses a going concern warning, if you're trading in a money-losing stock, the first thing that you should go do is search for going concern in a 10Q. If they say no going concern, you could breathe a small sigh of relief, but if you see it in there, you should really be, your spidey sense should be tingling that you should have some risk mitigation plan for any position you're holding. Maybe that risk never gets realized, but if it does, you get something like this, 70% down in a day. UK Dave, what's up? He says, any thoughts on UNH? Did that end up being true, Dave, that they were under DOJ investigation, or did that end up getting debunked? That would be my question. If they were under investigation, I would not want to, my risk parameters, I have better places that I'd rather risk money. But if that news ended up being fake news, then maybe I'd take a look at it. We got some people saying strong buy opportunity, a lot of people saying stay away from it. Analysts downgrading it on earnings growth concerns. Yeah, I would say, you know, this is up there in the highest of high speculative trades. If there is bad news, it's a long way down from $300, if you know what I mean. If that news ends up being fake or they get past it, you could get a nice pop up. I have no way to tell you how to measure the risk in that, because I just haven't spent enough time studying UNH. I read the headlines as they pass by. I love watching plays like this. I might start paying more attention to it, but I generally won't trade them. I think the closest one we got where we were really trading it for a while when the IV was high was Hawaii Electric, HE. Now, they weren't under any federal investigation. They have, and still do, lawsuit risk over the Hawaii fires. But when it had a lot of bouncing around, we were trading this one. I remember Anya made a lot of money on this run here, $7 to $18 on a good news day. But unless that news is concrete and final, look what happens. Fades back down. So we were taking profits into this run up, and mostly have not been trading it since then. I don't know. I haven't seen any Discord chatter if anybody's still farting around with this one or not. But it's a legal risk play. If the lawsuits end up getting resolved in Hawaii Electric's favor, you could see a significant move up. It was trading at $40 before the fires. And if the lawsuits go against them, then you could see this thing crater 70% too. So as I was trading it, you know, I was only putting money in that I'm willing to lose overnight. You can read that as very small trades. But we were buying shares, we were selling covered calls, we were selling cash secured puts. And some people were just straight swing trading it. Right now, I have no position. Anya says she rebought at 8. Good luck to you, Anya. Good to hear that you're in the green, and I will pray for good news for you. All right, that is going to be it for Wolf. Let's take a look at some of our other retail plays here real quick. AMC is at 301. The other cinema stocks also in the green today, other than Marcus. Bitcoin at 109. Beautiful, running up off my chart here. MSTR up $2, up about 0.5%. GameStop down here in the bottom left, up 1%. It is closely still mirroring the move up in Bitcoin, which is my thesis for owning GameStop. It's a gamble on, did they buy cheap Bitcoin at 70,000? That is the play for GameStop. If we find out they didn't, then I think GameStop comes down. If we find out they bought or are buying Bitcoin, then I think there's room for people to still have a bullish opinion on GameStop. I still rate it a speculative play based on your belief about what they did when Bitcoin was cheap. And because based on earnings, $28, based on earnings from their core business, $28 is overvalued by about 2x. However, if they bought Bitcoin cheap and they're enjoying some unrealized gains from Bitcoin moving up, the whole story on earnings will change, as will analyst price targets for GameStop. You'll see that analyst price target move up if we find out they bought cheap Bitcoin, because they will have to factor in estimated gains from Bitcoin. So keep hoping Bitcoin goes up and pray that Ryan Cohen bought it when it was cheap. I think he's a smart guy. I think there's a chance that he did. I wish he would tell us. But UK Dave, will they disclose at the next earnings? I wish he'd tell us now, kind of like the MSTR strategy or any of these other Bitcoin technology companies. They all seem to like to brag about it. It's kind of odd that GameStop is not. To my knowledge, they don't need to disclose it before a 10Q. It's kind of like a voluntary disclosure. They already disclosed that they might buy it, so I think the hurdle is met as far as informing investors. And I hope to hear some good news in the next earnings. And if it's not the news that I want to see, then, you know, we might see the price get knocked down a little bit. Other interesting news on GameStop. If you follow me on Twitter, they sell trading cards and they have trading card grading. They increased their price for GameStop for trading card, sending them in to be graded. Initially, it was $14.99. Now they increased it to $19.99 some time ago. But pro members enjoyed free shipping. Now, recently, in the last day or so, that changed. Free shipping is no longer a thing on sending in your cards to PSA through GameStop. It's $9.99. They increased the price, but pro members get $5 off. So it went from free to $4.99. Now, on the bullish side, people will say that that's more money for GameStop. I'm going to be a little more unemotional about it and tell you they're not losing money on shipping now. That's how you look at things realistically. It was a loss leader. They were spending money on shipping. Now they've built up the market. They've built up the customers. Now they can not lose money on shipping. They can, that was a hole on expenses that they're now filling by charging pro members $4.99. So it's a good thing. Is it going to generate profits? I view it, until I hear differently from GameStop, is it's no longer a loss leader. Like it's not a loss every time they got to ship something. So good news for GameStop. Will it impact the amount of people sending cards in? Probably not. $5. I don't know. That what? It's a 25% increase in what it costs you as a pro member. $19.99 plus $5. I don't know. I mean, it might be meaningful for some people, but if you're sending your cards in for grading, what are your other options? You're going to pay for shipping no matter where you go. Hallie, yes, $4.99 for shipping for pro members, $9.99 for everybody else per order. Per order, not per card. If I remember correctly what the GameStop website said. Shipping cost is per order. So that's Bitcoin. That's my thoughts on GameStop. Good move on their part by covering some of their shipping fees. I like it. Other meme stocks that are prevalent in social media right now. Finger Motion, ticker FNGR. It's had a good run up over the last 5 months. I bought Finger at $1.30 in December. If you follow me on Twitter, if you're in my Discord, you already know this. However, over the past couple weeks, as it's been running up to $4, $5, I've been saying good time to take profits off. Don't believe all the promoters that this thing's going to $1,000. If you were in at $1 and you were able to get a run up to $4 or $5, I think that it's wise to consider taking some money off the table. I don't believe any of these price targets these promoters put out. They are definitely, without question, being paid to talk about this stock. We have evidence of that from company filings and their own admissions. I have no problem with people getting paid to talk about stocks. I do have problems with fake DD, fake analyst articles, fake news, rumors saying that Alibaba is going to buy Finger at $10. I got a problem with fake price targets based on no fact, and I got a problem with people saying that there's 200 million naked shorts when we can look at the short interest and see that it's a few million, a couple million short on Finger, not 200 million. Just people making up stuff. And you guys, I want you to be able to see through that. Now, there's people that believe that stuff, hook, line, and sinker. If that, if that's your thing, knock yourself out. I'm not going to try and talk you out of it. I'm talking to the people who want to get educated on this stuff. Number of shares short, 3 million. But the promoters are telling people it's 200 million. I mean, if you like made up data, knock yourself out. Believe in the 200 million. They have no evidence they can show you that that is true. It's just people yapping their gums on YouTube and space calls. Making shit up. People fall for it. Finger has their earnings coming up soon at the end of this month. The CEO has disclosed in filings and in recent interviews that the company needs to raise more money to grow. So just like I said last year, why I waited till December to buy in, I waited because they were saying then last year that they needed to raise more money. I knew eventually a dilution would come. That dropped it from whatever it was trading at, $3 or $4 to a dollar. That's when I bought in. Sell into these run-ups, wait for the next dilution announcement, which will be coming at some point this year. Maybe this month, maybe later this year. And if you love the stock, you can buy it again cheap. That's how I play these plays. You can do whatever you want. I don't care. I don't short stocks. I'm not short Finger. I posted my buy order in December for all the people who say I hate Finger. Like, you're silly. And you are not correct. I just don't like pumper price targets. G-Bucks is the other one that they're pumping. a company which makes a few $1,000s of net income. A few $1,000s of revenue, sorry. A few $1,000s of revenue. They've got a market cap of almost $300 million. Just unbelievable how this thing got pumped. 29 cents, 25 cents, up to $10. That is crazy. Beautiful promotion by the people pumping this stock. The companies put out all sorts of fake press releases about deals. This deal's coming, that deal's coming, this deal's coming, special dividends coming, all sorts of special announcements. Not one has been followed up on. Not one has been followed up on as factual. Very GTII-like in terms of the amount of press releases they put out that don't come to any sort of fruition. Very strong GTII vibes for me on this one. I would just say be careful. There is supposed to be a dividend issued today. I don't see anybody saying that they got it. And that dividend was going to screw the shorts, even though it's just a warrant to allow you to buy more shares. Works out really good for the company. Doesn't seem like it worked out for G-Bucks, but it did work for people promoting the stock to get a nice little run up here from $3.20 to $10. Hey, just see them for what they are. Get in, get out. Do not listen to these promoters telling you these stocks are going to $300 or that there's hundreds of millions of naked shorts. Just ridiculous. I'm following them just because, hey, we've swung trade finger to the upside many times. I like to see when there's momentum and why people are trading it. Get in cheap, ride it up, get out. G-Bucks, I'm not touching. But they're still pushing it. I'm mostly waiting for the next news from G-Bucks. So G-Bucks, we're watching you. We're waiting for the news. Overall markets today, the Dow is down, the S&P is down, the NASDAQ is up. SGMA is our top gainer on the screener here today, up 127%. WOK up 78%. We got Green Lane Holdings up 50. Oh no, let's not worry about that one. 0.009 cents. Anywho, I will be around in the Discord. For those of you that are members of the channel, members of the Discord, we will see you there. I got to take a break and fix some lunch because I have not eaten yet today. And I got to get my workout in. So thank you guys. It's been fun hanging out with you. Hopefully you learned something today about Wolf and what to look for in the financials and the 10Qs. And if you like trading these very speculative plays, knowledge is power. And for those of you that are buying the dips, I wish you good luck and blessings that the gods give you a little send up where you can lock in some gains if you bought in cheap here. And, you know, we'll also wish you good luck that Wolf comes out and says this was all not true, but I don't see that being a realistic outcome. It looks to me like it is headed at some point in the near future to some sort of reorganization. So please be careful. Please be careful in this play. Thanks, guys. Have a good morning, and we will see you in the Discord. I need about an hour or two break to get some food and get my workout in. We will check with you later today.